Nintendo says it won't raise the price of the Switch 2 after all. The company had paused pre-orders of its new console to assess the impact of US tariffs. The White House's evolving trade war has also forced consumers to adapt. And the data shows they're not happy about it. The University of Michigan's Consumer Sentiment Index plunged 11% in April. That's the second lowest level on record going back to 1952. Itzhak Ben-David is the Neil Klatzin Chair in Finance and Real Estate at Ohio State University's Fisher College of Business. Thank you so much for joining us, because we're really interested in trying to get into consumers' heads right now. We saw the last set of retail figures showing a massive boom really in spending, but that was because it's almost panic buying, isn't it? They were stockpiling before prices went up.
Yes, absolutely. If you knew that prices are going to increase tomorrow, then you would start shopping today, right? That is how it works. This is what we see. We see that there is greater interest in buying new cars, in buying new TVs. People are hoarding ahead of the upcoming tariffs.
But that just suggests, you know, they're going to go off a cliff of confidence once the new prices kick in, because they've spent their money this month, they're not going to spend it next month, and the prices are going to be higher.
Exactly. I mean, it's better to spend it this month and get the good price. We saw it also on import to the United States. There is a spike in imports to the United States of both of goods and materials for the industry. So also businesses think the same way, in a way, right? This is your last chance to buy things at a pre-tariff price.
Also, you get this sort of state of flux, don't you, when there's so much uncertainty, where you don't know where prices are going to go. People just don't spend, and that's going to be the next phase, presumably.
Well, you think twice before spending, right? It's less spending less maybe on vacations and more on things that we planned on doing anyway. So you would have this kind of cautious behavior. So I anticipate that we will see more cautious spending. Let's call it this way. Looking for coupons, looking for items on sale, preparing for the worst. You know, it's kind of a semi-pandemic days again.
Yeah.
Remember the March 2020.
Because it's a horrible feeling as well, isn't it, when you're also seeing the value of your savings fall. You know, a very high proportion of regular Americans invest in the stock market, and they've got shares and bonds, of course, as well. So they're seeing their daily expenses rise, or they're expecting them to rise, and they're seeing their savings fall. And that's a really nerve-wracking situation. And jobs going as well.
Well, for sure. So we see a retirement age kind of ticking up. So people start kind of reconsidering when they will retire, because, you know, if your retirement fund dropped 15 or 20%, you probably kind of reconsider when to pull the trigger on retirement. We see people leaving less their job, so it's try to cling to their current job as opposed to leaving their current job and looking for a new one. So it's, you know, the safer option is to stay where you are, really.
Yeah. Professor Ben-David, really appreciate you joining us today. Thank you.